If you're looking for an easy trade setup, you want something that is really mechanical. In this video, I'm going to show you exactly that. There is a trade that happens almost every single day, and when it does set up, I'll show you truly how powerful it can be. So right here, we have essentially the new day gap. That is what we're looking at. So every day between the end of the New York session and then the new open at 6 p.m. Eastern, there is the potential for this gap to form. You can see that this candle closed up here, and then this candle open down here, making that a gap lower. So when you have a gap lower, essentially what you're looking at is really the fact that price is looking to rebalance from what happened. Well, now what does that mean, right? Price gaps down, and essentially this is all void, meaning there's a high likelihood that this gets filled because these gaps, I mean, it's just, there's not a real rhyme or reason why they happen. So oftentimes markets do like to try to at least fill the gap, but it's not as simple as that, right? There's obviously going to be some variables that make certain gaps more likely to fill than others. But in general, when you see a gap lower, you can expect that the trade is likely going to at least attempt to close that gap. So we're going to start with the daily chart here, and I'm going to show you exactly why I like this location so much for a gap fill. Now I'm going to go ahead and draw the weekly open right here. This is going to be this black line, and we'll go ahead and title it weekly open. The reason I thought this was going to be a very likely level to be tested is because there was no bottom wick. So when there's no bottom wick and there's a gap on the weekly candle, it's likely to kind of come revisit that. Whether it trades all the way down, it's not my concern right now. The idea is that we reached for it, we tested it on the close today, and then the new day open today, we saw a potential bounce. That's the idea. What does it look like on lower time frames? We'll go through that right now. You see that same gap, and this is the new day gap. So the new week was our base level, and then the new day gap was our bias. We wanted to see that get closed, respecting that new week open. So when you go into the lower time frames, you can really get a clear picture as to how this works. When you see number one, the weekly open, and then number two, a near-term level, that to me is a really high probability signal that we're going to at least attempt to fill the gap. Now the gap fills right there, right? And you'll see on the candlestick, my exit's obviously a little bit before, and we'll go over some of the details as to why my trade looks the way it does. But essentially, what did I trade it based on was this giant wick. I looked at the break above this candle with a stop essentially down here as my trigger. So with that, you can see that this did come very close to my stop. I thought maybe I should have had it wider, but in this scenario, I think I was saved by about a tick. So sometimes you get lucky, but when you do get lucky, it's also important to realize that. And what I did to kind of align with that idea that I almost got stopped out, I simply added to the trade and tightened my stop. You almost get stopped out, that money's basically gone. So I went ahead, added to the trade, and my full target's right here. It exited right here essentially. I was just trailing it real tight. And I was like, that's good enough, right? I could have probably made, I believe it was about 500 bucks I should have made right there, but maybe 480 or something. What is that? 29, yeah, 15 points. Yeah, it should have been like 500 bucks, but sometimes you just take it off quick in case this does not fully test it. And sometimes you'll see an SMT, which is actually what we got here, where ES did not fill that gap initially. ES fell short. So you figure you're kind of testing the structure. Decent move, got double the size that I was intending to trade. So, I was a little more aggressive with the exit. I said, nah, I'll just get out right here. But this is a mechanical trade. It's very, very, very likely to fill when you see a gap, especially when it's gapping into some sort of level where you're expected to see a reaction. Test it out for yourself. Check out the weekly open, the daily open, see if there's a gap that forms. And if there is, this is something you could potentially add to your trading. It is something that I look for. I don't spend all day looking for it, but I simply just wait, see that, the open happens, check it, see if there's anything. And then maybe you get a trade and, this is a couple, like 10 minutes or whatever. It's really not that long of a time. This gap, they tend to fill quick. And if they don't fill quick, obviously, there's maybe different structure at play, but this is just a quick, insightful video, just straight to the point. If you like this type of content, make sure to leave a comment, share this, leave a like, and until next time, take care.